It wasn't a missile launch. It wasn't a breaking news alert. It was just a train, quiet, steady, cutting across the desert. But this wasn't just any train. On board were thousands of barrels of Iranian oil heading straight to China. No naval escort, no sea route, no Western oversight, just steel tracks linking two nations that had decided to play by their own rules. For years, the world watched oil tankers sail through choke points like the Strait of Hormuz or the Suez Canal, routes constantly guarded or monitored by Western powers, especially the United States. But this train slipped past all of that. To the casual eye, it was ordinary. But to experts in energy and geopolitics, it was like watching a tectonic shift in the global economy. Because this train wasn't just carrying oil, it was carrying a message, a signal that Iran and China were quietly rewriting the rules of global trade, a rebellion on rails. Here's the twist. This oil deal didn't just ignore U.S. sanctions, it outsmarted them. No ships to seize, no ports to pressure, just a land route built through years of backroom agreements and fresh infrastructure. So here's the big question. Why is this train more alarming to Western powers than any warship or missile? And more importantly, what does it reveal about the new balance of power in the world? Let's break it down. For decades, the global oil market was like a board game, and the United States owned most of the pieces. If you wanted to move oil, odds are your route passed through U.S. patrolled waters. The Strait of Hormuz near Iran, the Suez Canal in Egypt, and the Malacca Strait near Southeast Asia, all watched over by American naval power. But it wasn't just about controlling the seas. It was also about money. Nearly all oil deals were done in U.S. dollars, under the system known as the petrodollar. This gave America enormous leverage. Even when it wasn't part of a deal, its currency was. That meant constant demand for the dollar, and in turn, dominance over global finance. Now picture a country like Iran, sitting on vast oil reserves, but locked out of that system. U.S. sanctions meant exclusion from dollar transactions. Its tankers were tracked, and any buyer risked punishment for dealing with it. For decades, that setup worked. The U.S. could isolate nations like Iran or Venezuela, even pressure big players like China or India to comply or face consequences. But here's the tension. What happens when countries stop following those rules? What if Iran finds a buyer willing to ignore U.S. pressure? And that buyer has the infrastructure to build an entirely new route, one that avoids oceans, ports, and the dollar altogether. That's exactly what's happening. And this is where China steps in. Let's rewind to March 2021. While the world was focused on lockdowns and vaccines, a quiet but historic agreement was signed. Iran and China entered a 25-year strategic partnership worth $400 billion. This wasn't a simple trade deal. It was a deep alliance, covering energy, transportation, infrastructure, telecommunications, and even military cooperation. At its core was a simple exchange. Iran would provide China with a steady flow of discounted oil, and in return, China would rebuild Iran's infrastructure, roads, ports, railways, and digital networks. It was a lifeline for Iran under sanctions, and a masterstroke for China, which needed reliable, cheap energy to sustain its growth. At first, the partnership was kept quiet. Oil shipments disguised through middlemen or mislabeled as coming from other countries. But over time, the cooperation became more open and more confident. The turning point came with the launch of direct oil rail shipments from Iran to China. It might not sound dramatic, but this changed everything. For decades, oil moved by sea, easily tracked by satellite and maritime patrols. Western powers could monitor, pressure, or block tankers. But a train rolling through remote deserts and mountains across Central Asia? That's another story. Here's how it works. The oil starts in Iran, travels northeast through Turkmenistan and Kazakhstan, then crosses into China's Xinjiang region, where it's distributed to industrial zones across the country. No ocean, no choke points, and no U.S. Navy in sight. This isn't some isolated route. It's part of China's Belt and Road Initiative, a vast web of railways, ports, pipelines, and highways stretching across Asia, Africa, and Europe. Think of it as a modern Silk Road, not with caravans and camels, but with freight trains, bullet lines, and energy pipelines. Now imagine one of the Middle East's richest oil producers partnering with the world's largest energy consumer, operating in a system where Western sanctions simply don't apply. What makes this alliance even more powerful is that China isn't just buying oil, it's locking in supply for decades. Iran gains funding and infrastructure. China gains energy security. And together, they gain independence from Western interference. This partnership isn't just economic, it's geopolitical. It sends a clear message to Washington and Brussels. You can't isolate us anymore. We have each other. And that's why this train, quiet, steady, unguarded, is seen as so threatening. Because it's not just carrying oil. It's carrying a blueprint for a new world order. This isn't theory anymore. The Iran-China oil railway is already reshaping trade flows and rattling the geopolitical landscape. And those effects, fast-moving, complex, and unpredictable, are only just beginning. Sanctions are now being bypassed in broad daylight. For years, the United States and the European Union tried to strangle Iran's economy by blocking its ability to sell oil. The idea was simple. If Iran couldn't export oil, it couldn't earn foreign currency, and eventually, it would have to bend under pressure. But that's no longer the case. Oil is flowing again, not through secret channels or shadow fleets, but along railways that cross borders openly. Iran's exports are climbing fast, even under sanctions. In fact, Iran's oil shipments have risen above 1.5 million barrels per day, much of it heading straight to Asia. That's a huge recovery compared to the near collapse that followed the reimposition of sanctions. And guess who's gaining the most? China. By taking in Iran's oil, often at discounted rates, China gets a major energy boost at bargain prices. That's crucial as it fuels its industries, EVs, manufacturing, artificial intelligence, all energy-hungry sectors driving China's rise. But this story isn't just about Iran and China. It's part of a larger ripple effect. Every barrel of oil traded outside the Western-controlled system chips away at the dominance of the US dollar in global energy markets, the backbone of the so-called petrodollar system. For decades, nations had to use dollars to buy oil, giving the United States enormous influence over the global economy. Now, more deals are being struck in yuan, dirhams, or even barter trades, completely bypassing the dollar. Oil markets depend on predictability and control. When that control slips, when countries like Iran start moving oil outside traditional routes, it shakes investor confidence. Prices fluctuate, uncertainty rises, and Western policymakers scramble for answers. Beyond the markets, it's deeply frustrating for Washington and Brussels. They've spent years crafting careful sanction regimes, only to see them undermined by a single rail network that operates in plain sight. And here's the unsettling truth. There's nothing the West can do to stop it, not without risking a much larger confrontation, because this isn't smuggling. It's a visible, legal, state-backed supply chain that simply exists outside the Western framework. What we're witnessing isn't just the collapse of sanctions, it's the erosion of Western control over global trade itself. So that raises the real question. What happens when more nations follow this example? Zoom out for a moment. This isn't just Iran selling oil or China securing energy. It's the emergence of a new global trade order, one where Western dominance is no longer guaranteed. For nearly a century, the world followed a Western playbook. The United States dollar reigned supreme in trade. Sea routes guarded by American warships kept energy supplies flowing. And if a nation disobeyed, it could be cut off, economically, diplomatically, or even militarily. But that system is now being challenged, from multiple directions at once. Start with BRICS, the alliance of Brazil, Russia, India, China, and South Africa. It's expanding fast, with countries like Iran, Saudi Arabia, and Egypt joining or showing strong interest. Together, they're building parallel trade and financial systems that don't rely on the West. Then there's de-dollarization. More and more oil contracts are being priced in yuan, rubles, or even gold. Nations are signing currency swap deals, trading directly with one another while bypassing United States banks. That Iran-China oil train is just one visible piece of this puzzle. A real, physical symbol of how new trade routes are being built across land, linking countries that want freedom from Western dominance. China's Belt and Road Initiative is laying the groundwork. Railways, ports, pipelines, connecting Asia, the Middle East, Africa, and beyond. And Iran, eager to survive under sanctions, is all in. Even Saudi Arabia, once the cornerstone of the petrodollar system, is now flirting with non-dollar oil sales and investing heavily in Chinese projects. Across Africa, Chinese investment and trade are expanding fast, often conducted in local currencies. And perhaps the most telling sign of all, the West is no longer being asked for permission. These countries aren't waiting to be included in global trade. They're creating their own paths, their own currencies, their own partnerships, and, increasingly, their own rules. That quiet train running between Iran and China might have started silently, but it's part of a far louder message. We don't need you anymore. And as more nations watch this unfold, they're asking themselves, should we join this new system too? That train leaving Iran wasn't just carrying oil. It was carrying a message of change. The old world order, where the West controlled global trade and energy through sea routes, sanctions, and the dollar, is being challenged right now. This train represents more than a fuel shipment. It's a symbol of shifting power eastward, toward a new web of trade routes, alliances, and financial systems spanning Asia, the Middle East, Africa, and South America. These regions are no longer just players. They're becoming power centers in their own right. And while the West remains powerful, its grip isn't what it used to be. This isn't just geopolitics. It affects you. It influences the price of fuel, the value of currencies, and potentially the next major global conflict. Because if oil no longer needs to pass through United States-controlled waters, if the dollar is no longer essential for buying it, and if sanctions no longer work as intended, then we're stepping into a world with entirely new rules. Imagine waking up to find that the West no longer writes the rules of trade, technology, or diplomacy. It's already happening, not with missiles or revolutions, but with trains, trade deals, and quiet handshakes behind closed doors. The age of Western oil dominance didn't end with a bang. It ended with a train. And this is just the beginning. If you want to stay ahead of this global transformation, to understand the strategies, deals, and power plays reshaping the world, subscribe, because the next chapters go even deeper. This isn't just a story, it's history in motion.